Good morning, Patreon subscribers. Hope you're doing okay. So gold, we got a little bit of sentimental and fundamental knowledge that I need to just tell you about. Is that the US yields were very green and now they're going negative. So because of that, it tells us that the dollar is going to soften, and then we're going to be risk on as a result. We already are risk on, but it looks like we're going to continue to be risk on. We need these yields to come down a lot for risk on. They're very high. They're too high, basically. These need to come down a lot more. And if the 3-month collapses, that's going to be quite significantly risk on. We need the short-term dated yields down a lot, and then we're going to see like a normalization of the yield curve. If the yield curve goes back to normal, where these are lower than the long dated, that's going to be great, because that tells us there's not much fear and uncertainty near term, but there's, compared to the long term, compared to, 30 years from now, we need the 3-month a lot lower than the 30-year, for example. Hopefully that's clear. So instead of, I'll show you what I mean. So currently this, all right, so the 3 months, a lot of fear and worry. The 30-month isn't that bad. What we want is that, where we've got really no fear or uncertainty near term, but maybe some worry and stuff to be scared about long term. Okay, so currently the yield curve's this, all right, and that's not good. That's risk off. But if we go down, this is going to flatten, and then it'll be down to the Fed to see what they want to do, and then Powell might give us the green light, and it does this, and we might see this year potentially. So that's what we kind of want for risk on. Okay, this is why this is important. We want to be checking yields and just check those values. We do a bulletin update every day. We look at these, but we do need these down a lot. So these coming down is a risk on sign, okay? And it's going to hurt the USD, and it's going to potentially boost gold. So that's a little bit of fundamental knowledge transfer. So because of that, we can probably do okay. The profitable traders are long. However, the retail traders are long we're just over 50%. So we can see that we're teetering a little bit. We do have a lot of technical resistance overhead. So do bear in mind, if we do break above that, then we're going to get the SLC above. Very likely, to be honest with you. If we go that, we're going to do this. We're going to make a $43 move, grab that liquidity, all those stops, hunt those people down, and then, sell there. So it could be quite painful. One thing about gold is that it does pay you very nicely in swap. So if you are short, it does pay you quite nicely. But if you're long, you have to pay the swap interest. So that's just something there. So the profitable traders are long. They have been for ages. So watch what they do, and they've made quite a lot of bucks over this time, and they've been long for a while. So let's look at the euro, and okay, so 107.70. We might have probed it. Right, so keep an eye on your monthly pivot at 107.58. If we have probed it, then that might be job done, and that would be very frustrating. So be careful. They are selling it over time. Just keep an eye on your monthly pivot. If we get that, we'll get the weekly open. And then I would say we were going to get the SLC, but they brought their stops all the way down. So those might not be enough. It might not need to punish these people. If they brought their stops lower, then that might be job done. So we've got to be careful. Above MP, target weekly open. Above the weekly open, target ATR long. However, if that is job done, then there might not be any driver to push price higher to take stops. So that's how it works. Okay, so we've got to be careful. And things are out of bonk with AU, NU, and GU, because at the FXCM level, they are sell, and whether or not it's going to agree with FX as a SI, we'll have to see. So we are going up. So FXCM clients could just be right; they could just be getting paid. One above is large at 0.7. I was saying yesterday we're going to come up and get those stops. We went down and raided all those stops. They come back in, and I think what's going to happen is it's going to come up, come down, come up, come down. It's going to take stops, take stops, take stops, and it's going to do that. So we came down, took all those out, and they've come back in the casino, which is good to see. And so I think that's what's going to happen there. And then, monthly pivot test, below the monthly pivot, we'll target the SLC. Really horrible. GU. And yeah, so very tricky. I can't wait for the weekend, actually. It's very bonkers markets. SLC 12150, so we're 20 pips away. Possible. One below is at 12050. And so, probably maybe even sell there potentially. It's job done, isn't it? So I think maybe the Euro USD is job done. Taking stops, yeah, we're fine. We don't need to push price any higher. We're taking stops now. That's fine. We can fall or we can do whatever we want. As long as we're taking the stops, that's fine. That's all they care about. So potentially that's could be a good TP and it could be a good entry. So 1 to 150 HR target long. So beyond that, we haven't really got much technical justification to exceed ATR long. Take that, it's job done. Down we come, down to weekly open potentially. All depends on risk as well. And you saw the US yields were falling, so that can help. Dollar CAD. Hopefully it loads. It took ages to load dollar CAD yesterday's video, and yeah, it's not too bad today. There's monthly pivot, so 134.29. Okay, so worth noting because we've got that, because we've got below the weekly open, we have to target the SLC 60 pips away. Okay, and the one above is at 134.81. So it's potentially we're going to come here, fluctuate a bit, and then down we come. They are going long slightly. They went long, sold it, and now they're going long. So you see the N and then the V. It's horrible, isn't it? This is horrendous moves. Just absolute chop fest. So be careful, dollar CAD. Of course, you've got to check your oil component as well. And yeah, should probably be falling on dollar CAD. We got the ATR target short, and we did, didn't we? I think it's hard to say, but the one below is 91.60. One above is at 92.30, and yeah, I mean that's your target for the week. So whether or not we're going to get that is possible. Yeah, it's 15 pips, so that's possible. We can exceed the ATR just to grab those stops. Should be really horrible, but because it's horrible and cruel, we have to expect it because it's just nasty, isn't it? Everything that we're seeing is nasty moves, and because the yields are falling, we have to remember it's putting pressure on the dollar. And the 10-year was the first one to go negative, so that's what caught my eye. And the dollar yen tracks the 10-year very well, so this could fall. There's your ATR target short with monthly pivot. So 130.69. Be careful there, okay? So they got double confluence. One below could be safe at 130.39. One above 132. Be really careful. And I'm not sure what to say for our trade of the day. It might be okay. It's just really, really, it's quite treacherous, really. You just have to be careful. It might be a case of placing orders. It's better. Entering the market, you get chopped up a bit. If you place an order, you could place an order to sell there with a stop there. So that's like less than a 20 pip stop. And that's quite manageable, isn't it? And if you place an order and you don't get filled, it's not really a problem. But if you enter at market, you can get a bit chopped. So orders are quite nice, in my opinion. Right, so I'm going to wrap up now. Gold is now fallen, which is like really typical. Okay, we've fallen like $3 the last 15 minutes. And so we have to just keep on your toes, be nimble. And it could be that the orders are the way to go as well. And I'm not sure about trader day tomorrow. It depends on how this goes. If it goes poorly, we'll just write off tomorrow because we're just seeing a lot of chop. And so now the 5 years gone positive. And it looks like the 2 years going to go positive. So the yields are fluctuating. Because of that, there's just telling us uncertainty basically around risk and USD. Be careful, and I'll speak to you guys soon.